Hey everyone, it's Scott Wirtanen. I'm the founder and CEO of Honest Rate. And I want to talk to you a little bit about what are some of the things that are the same with like every mortgage company that you talk to, and what are some of the things that are different? Because there's a lot of information out there and it's hard to keep it all together. So first and foremost, when you're looking to get pre-approved, whether it be for a refinance or for buying a home, the first step is like, what can I get approved for? What are my options? There's generally four things that mortgage companies and mortgage lenders or banks, brokers, whoever you're working with, are looking at. And that is income, assets, credit, and the property. So let's dive into those a little bit. So let's talk about income. What are the common things that lenders are looking for on income? So number one, they're generally looking at what is your current income, and then what is the last 2-year history of your income. And how companies look at that will depend on what is your income source. So if you're retired and you're receiving something like Social Security or pension, the history is not as important as the present. And also what's going to happen in the future is probably as important as the present, if not more. If you're employed, understanding how are you paid? Is it hourly? Is it salary? Is it commission? Is it bonus? Are you paid by the job? Are you W-2'd or are you 1099? And generally, they're looking at current income and history. So if you're employed, what you're currently doing, how does that compare to the last year and the previous year? What is the trend? Is it increasing? Is it decreasing? Is it stable? If you're self-employed, a little bit different. Depending on how long you've had the business, general rule of thumb is looking at the last 2 years of tax returns. There are some cases where you only need 1 year of tax returns. And there are some loans that don't even look at your tax returns. Maybe it's the last 12 months of your bank statements. Maybe it's the 1099s or some other form of income, profit and loss. There's all kinds of creative financing out there nowadays compared to what there was maybe 5, 10, 15 years ago. So income is one piece. So being able to understand on our side of what is your income, where is it coming from, and some of the details will help us help you. The next piece is assets. So everyone thinks of assets in the purchase world of down payment. But on the purchase side, it really kind of covers three things. Down payment is one. The second is if you have any funds out of pocket for closing costs, taxes and insurance, other expenses that go along with the process. And then the third piece is what's called reserves. And that's money you're not necessarily coming out of pocket with, but that can help strengthen your quote unquote qualifying profile for a mortgage. And that's similar in a refinance. There are some loans that require that you have a certain amount of money saved, whether it's 6 months of the mortgage payment or 12 months, or if you own multiple properties, it can make it a little more complex. So understanding in our world, what are the assets? Are they needed? Do we have to document it? And that's really the next piece of the asset piece is, can we prove it? Do you have 1 or 2 months of bank statements, 401k, IRA? Heck, nowadays cryptocurrency has guidelines. So in our world, being able to understand what you have, where it comes from, and how we can document it. And then the last piece of that is sometimes you can use your assets as income, depending on your age, depending on the loan type. You may be able to kind of do an assumed income based off of your assets. So all kinds of things there on the income and asset piece. All right, the next two are credit and property. Credit is very important. There used to be a world 15, 20 plus years ago where it was like not as important. But in today's day and age, there are a lot of things based off of the credit score is one piece. So let's talk a little bit about that. There are multiple scores. There's different credit ratings for mortgage versus car loans versus personal loans versus credit cards or life insurance. And in the mortgage world specifically, you can do a hard check, you can do a soft check. You can do that with the trending data or without. So there's multiple different options that we would look at, and it really just depends on what are you trying to do. Do we want to just get a general idea of what's out there? Do we need to actually issue an approval? or do we just want to look at the basics? So a lot that goes into it. But here's the general breakdown: is in a mortgage, the general rule of thumb is that you're going to look at the middle score of each borrower. So if it's you on the loan by yourself, you get 3 scores. We're going to look at the middle of the 3, and that's your qualifying score. If you add a co-borrower or co-signer on the loan, you're going to take the lowest of the 2 middle scores. But there are options out there that will take a blend. So some loans will say, hey, you have a 620 and I have a 700, so we're going to use the 620 because that's your score. Other loans will say, you have a 620, I have a 700, let's take that together, let's blend it and get an average, and that's what we're going to use to qualify you. So all kinds of pieces there with the score. But more importantly than just score, what are lenders looking at? Well, they're looking at your account history. What are your payments like, especially on a mortgage or a home equity loan or any type of lien against the property. Is your payment history clean for the last 12 months? And what does clean mean? It means you're not 30 days or more past due. So you can pay the loan inside of that grace period or late window. But the minute you go to the next month, so if your payment's due in January and you don't pay it until February, that's where challenges start. What else are we looking at? Well, we're looking at what other debt do you have outstanding? We're comparing the monthly payments on all of your debt compared to the income. We're also looking at if there's any past due amounts, if there's any collections or charge-offs or bankruptcies or accounts in dispute. And oftentimes that's where a mortgage lender or a mortgage broker comes into play to really help in that the rules aren't always black and white. There are certain rules that just say, hey, if you have X, Y, and Z on your credit report, you can't do it for a certain amount of time. Like there are some loans that might tell you, hey, you have a bankruptcy, you cannot get a loan if you have a Chapter 7 bankruptcy for 4 years, 7 years, whatever those rules are. But then there's loans that don't. And especially when you work with someone like us at Honest Rate, we work with a bunch of different investors, and there may be a way that we can say yes where someone else might have said no. All right, the last piece is property. So there's a handful of things that go into property, whether you live in the home, if you're renting it and making income, if you use it just as like a secondary vacation property, and then also what type of home is it? Is it single family? Is it multi-unit? Is it mobile or manufactured? And depending on the type of home and the usage of the home, that can impact your loan options, the loan terms within those options, and inevitably impact whether or not you're happy with it. So talking through those ideas and making sure that if it's a purchase, that depending on what you're buying, we have the right loan set up for you, or if it's a refinance, let's talk through the property and make sure that what we're presenting you as an option lines up with your property type. So as a whole, we try to make it simple and easy. I mean, you really have a handful of options. You can provide all of your information online. You can chat with us. You can text us. But getting a lay of the land up front about income, assets, credit, and property will allow us to help you. And in doing so, there's really 2 pieces that we try to focus on inside of all of that information gathering. So number 1 is we're going to use that to try to find you a loan that we think accomplishes your goals the best. So if you have multiple options, understanding those details helps us help you. Number 2, we talk to people all the time that they run into a roadblock. They get told no somewhere else, and understanding whether it's income, assets, credit, or property, maybe there's something we can do that's different. And that's really what we pride ourselves on, is trying to find ways to say yes where others have said no. So I know this is not always the fun part of the process, but having a brief conversation, 5-10 minutes to help us help you will inevitably get you the information you're looking for and put you in a good spot. So if you have any questions, any comments, concerns, please reach out to us. You can call, you can text, you can email. Direct line is 216-998-0123, and you can reach us at Honest Rate. We look forward to helping out, and hopefully you get something from this video.